Hey, you guys, so I just got off a 12-hour shift and looked at my portfolio in the after hours. Looked like the market went up, but I'm just seeing so much noise outside of the stock market. And that includes the administration, politics, the war. Oh, that's what's going on today. There's so much excess noise. And that's not even just outside of the market. That's also within the market. You have prediction markets where there's a lot of sports betting now. It's crazy. Top it off, you got your day traders, your future traders, and all that extra stuff, right? But I'll go ahead and tell you guys this. I mean, if you guys sustain a long-term investing strategy, whether you'd like to day trade, that's awesome, that's cool. But if you have a portfolio that's strictly set on long-term investing, you're more likely going to outperform anyone who's just strictly dedicated to day trading. There's always an exception, but for the majority, you're going to outperform that prediction market trader because now we got prediction markets, sports betting, political betting. So you're going to outperform them like 9 times out of 10. I want to say 10 times out of 10 if you ask me. You can't tell the future and you can't always time the market unless you're a market maker. So um, keep keep hitting these markets with structure, you guys, with discipline, with repetition. Forget timing the market. Just be in the market. Create structure, whether it be behind going with margin investing, where you're borrowing against your assets to buy more assets and then paying it down. Then you repeat, borrow against your assets, buy more assets, pay down your margin. I would consider myself a margin investor. Now, at times I like to still buy extra assets on the side, preferably that dollar cost averaging method, right? But I am majority a margin investor. I repeat the same thing over and over, similar to the characteristics of a disciplined blind investor. The disciplined blind investor just invests, lives his life, does the same thing. Granted, the blind investor is more likely going to have an automated reinvesting type of structure way of buying assets. Money's taken from his check, put into assets every week, every month, bi-weekly, whatever it is. I pretty much do the same thing, but on either a monthly or quarterly basis. What I'm doing, you guys, is I'm borrowing against my assets, buying more assets, pay down my margin. Borrowing against my assets, basically using my line of credit, buy more assets, pay down my margin, build my ownership in assets. I don't want to be $20,000-$50,000 in margin debt because it's going to take me forever to pay that down. I am a very conservative margin user. That, and if I know I can pay down $5,000 in maybe 2-3 months or even a month, I'm going to borrow $5,000, pay it down, build my ownership. You know why? Even if I do have an interest rate on the end of it, at the end of the day, I'm owning an appreciating asset. I do not care about the short-term rate of return. I care about the long-term rate of return. I'm not betting on the short term. So if I decide to borrow against my assets and put $10,000 down on margin and my account drops, that means nothing to me. You know why? Because I'm worried about the ownership. I want to build on the ownership. I don't care about the short-term rate of return. I want ownership. I want the discipline implemented in creating more ownership in my assets. Okay, so hope you guys found value in this video. Don't worry about the excess noise outside of the market, even within the market. Keep buying your assets, keep building discipline, and become that blind investor.